Have you heard all the buzz and rumors about Nigeria's new tax laws starting in 2026?
When una go really confirm my wickedness, now when January don't reach, you can go minus 20% from my money tax. See?
Some say your bank account will automatically be drained.
You know when that money they make I keep. If you say that contribution when they give me say okay keep, you want to come out 20%.
Others claim that everyone will pay more and that small businesses will be crushed.
What happen to all those politicians when they collect big money as salary? Now those ones supposed to pay tax.
In this video, I will walk you through the real story, clear up false claims, and show you exactly what the new tax law system does and does not do.
Imagine what your politicians will use this tax money to do. They will finish you.
In June 2025, President Bola Tinubu signed into law 4 landmark reform acts: the Nigerian Tax Act, the Nigeria Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Board Act. These laws were drafted after years of discussion and debate with the goal of simplifying Nigeria's tax system, replacing a patchwork of more than 60 different taxes, and making sure that more people and companies contribute fairly to public finances. The reforms aims to unify rules, reduce confusion, widen the base of taxpayers, and make the tax burden fairer. Under this new framework, both personal income tax and corporate income tax are being reworked. Because of that, many misconceptions have arisen. Some are born out of genuine confusion, others emerge from fear or misunderstanding. Let us examine several of the most common myths and correct them. One of the scariest rumors is that under the new tax regime, the government will automatically withdraw taxes from everyone's bank accounts. But this is not true. The law requires banks and financial institutions to report customer information to the tax authority only when a person's cumulative monthly transactions exceed a very high threshold. That reporting is not a mechanism for immediate deduction. It is merely a way for the tax authority to identify potential taxpayers who may be evading tax obligations. For the vast majority of people, most with normal household income and transaction levels, this reporting provision is irrelevant and will not lead to surprise deductions. So the claim that all Nigerians will see their money vanish without notice is false. Another common misunderstanding is that everyone will pay more tax starting in 2026. That statement is overly simplistic and misleading. In fact, many lower and middle income earners will see a reduction in their tax burden, and higher earners may pay more, but it depends on how much you earn, what deductions you qualify for, and how your income is structured. Imagine you earn 70,000 naira per month. That's 840,000 naira in a year. Under the new tax law, your first 800,000 naira is exempted, so only the remaining 40,000 naira is eligible for tax. But before applying tax, you can subtract allowable deductions such as your pension contributions, certain health insurance, and rent relief. Those deductions can bring your taxable income down even further. As a result, you might end up owing 0 in tax. Hence, the idea that everyone pays more is simply not accurate. Some claim that these reforms reflect a desperate scramble by the federal government to extract more money from ordinary people. The truth is more nuanced. The reforms do aim to raise more non-oil revenue, but in a manner that is structured, predictable, and more equitable. In fact, one of the stated goals is to relieve low-income earners from undue tax burden while capturing those who were previously outside the formal system or just evading taxes. Another criticism is that by increasing taxation or tightening rules, the reforms will stifle business growth, discourage risk-taking, and destroy innovation. But that is not the intention. Reforms contain features intended to do exactly the opposite. The exemption for small companies, the tax credits for capital investments, and the consolidation of levies are all designed to reduce administrative burden and free up resources for companies to reinvest. I think it's far from killing productivity. The reforms aim to channel tax policy toward encouraging investment, formalization, and growth. Turning to corporate income tax, some believe that every business, no matter how small, will face huge tax increases. That is not true. The new laws provide special protection for small businesses by defining size thresholds and asset ceilings. For businesses under those limits, corporate income tax will be 0 and additional levies will not apply. In effect, many small firms will be completely exempted from profit tax. Let us run through a more detailed scenario to see how tax might apply. Imagine you earn 1.2 million naira in a year. From that, you subtract your pension contribution, some health insurance, and rent relief. if. Suppose those deductions total 200,000 naira, that leaves 1 million naira as taxable income. Under the new system, the first 800,000 naira is tax-free, so only 200,000 naira is taxed. On that 200,000 naira, you pay 15%, which is 30,000 naira. So your total tax for the year is 30,000 naira. Your effective rate is small. That shows how deductions and the tax-free band combine to reduce tax for many earners. The real goal of Nigeria's tax reforms is not to extract money indiscriminately, but to create a fair, modern, predictable system where those who can pay do so, and those who cannot are protected. The reforms expand who pays, reduce complexity, and bring clarity to rules that were not so clear before. Misconceptions will usually flourish when new systems are introduced, so it's normal to hear fears about automatic deductions, blanket tax hikes, or punitive burden on small businesses. But when we look at the text of the law and run realistic examples, we see that many of those fears are misplaced. Workers with modest income may pay zero or much less tax than before because of the exemption and deduction rules. Businesses under defined size thresholds may be entirely exempt from profit tax. Larger businesses get clearer rules, unified levies, and incentives to invest rather than punish them. In short, the reforms are designed to encourage compliance, reduce ambiguity, and allow growth rather than stifle it. If you found this explanation useful, please like this video, share it with friends, and subscribe so you won't miss out on future breakdowns. Thank you for watching. I'll see you in the next video. Bye for now.